I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's top of mind for you this morning?
Well, top of mind is the resilience of the market in the face of what might be a Bernie Sanders win tonight, on top of obviously the continued spread of the coronavirus and the fact we don't have anything. I know that I don't want to be glib about either side. Is the market reflecting true the reality of the stock market in Corona? Well, for the United States companies, did best. You for Ulta, yeah, you can buy Ulta. Home Depot, I don't think it's too much China. They actually have, they make some things there. J&J, no. So there's a lot of companies that you want to really separate, but then there's other companies that you really, that are levered to the gross domestic product. And let's be clinical. The gross domestic product for even our country could fall by this, but it certainly will fall in China. So if you go back all the way up to 600, I think that's a little fatuous because we know the GDP is going to fall in China, and that does matter to a GM. It does matter to a Ford. It does matter to Freeport. It does matter to Caterpillar. And it's funny, when I looked at the hospitals being built, where were all the Caterpillar? They didn't have any Caterpillar equipment. So I just urge people, I know that you might want to sell your index fund. That's not what I think you should do. And I did say in 2007 you should. I think what you have to do is say, okay, what in my portfolio is levered to travel? What is it levered to gross domestic product growth, to worldwide growth? And those can be trimmed. And it's no sin. And that's what we're doing. We can talk about that later in Action Alerts.
Now, there are three really big topics that we're going to talk about today, and that's Alphabet's earnings. We're going to talk more about oil, because you're turning a little bearish, and I want to get your thoughts there. And then we've got the coronavirus.
Yeah, and by the way, I'm so glad you said a little bearish. And the reason is on oil. Let's understand each other, because I just was another series of people on Twitter who, I'm Jimmy Chill, they didn't understand. So I'm going to say this. There are stocks that I think are what I call wasting assets, which means that their long-term growth rate is slower. Then there are other stocks that I feel have a long-term growth rate that is solid. The oil companies have a long-term growth rate that if you think is growing, I think that that's an ill-advised position. Okay. Now I'll mention there are many stocks that a new generation of money managers, forget the millennials, new generation of money managers who happen to be millennial or certainly or social conscious, they don't want to own Exxon. And when they see the Exxon downgrade from hold to sell at Goldman, they're in sync with that because they think that, look, their cash flow could be challenged. Dividend one day is not going to be able to protect the stock. And I find that eminently reasonable. Bernie Sanders retweeted my tweet. And what I'm saying when I say I'm done with the fossil fuel stocks, people are saying done with fossil fuel. We can't wean ourselves off of fossil fuel fast enough. But if you're pro fossil fuel, I really think that you may, which the president is, I think you may have to rethink that. Because I think there are a lot of people like Satya Nadella, a lot of people like Elon Musk are working very hard to wean us off and have a smaller carbon footprint. And I'm saying that it's very difficult for Chevron, for an Exxon to have a smaller carbon footprint since they're carbon companies, unless they put an initiative together where they're going to plant 1 billion trees so that they offset. And I'm waiting for that. I'm also waiting for a declaration that they will no longer flare beyond 5% of natural gas. The industry itself has not necessarily been a great actor. So I'm not buying it. I don't want to buy Chevron here, and I don't want to buy Exxon. And if these stocks go up, and I'll talk about Action Alerts, if these stocks go up, it's an opportunity to leave them and reposition.
Now, before we dive any deeper into business news, I do want to talk to you a little bit about the Super Bowl because we had a hometown hero, Andy Reid, and I want to get your thoughts on his win, Jim.
Okay. I was texting a number of people who are Philadelphia fans and also sports writers. It's really incredible. This man has become, Andy Reid, like the most beloved man in the NFL, and I'm fortunate enough to have been at a Phillies game with him and my dad. Fortunate enough to have gotten to know the Eagles through him. He was always so gracious to me when I come to camp. I got to speak. That's the first time I got to speak to players, and he's beloved. And I've spent a lot of time with Mr. Lurie this weekend when I was down there, who's the owner of the Eagles. It was a great move to Kansas City for him because the city loved him and embraced him. But what you need to know is the players. I think he has a unique ability to both motivate and to be beloved by even the most difficult of players. And it's very unusual to see someone that so many people were pulling for. And I'm very glad that he had Patrick Mahomes, because Andy Reid deserves Patrick Mahomes, and he deserves that win. He and Tammy is a friend. My wife would say acquaintance, because we don't. Once she's been to Kansas City, we haven't seen each other. Are the most deserving couple on earth in the football world, and I'm so thrilled for them.
And you really could see, just noting on the players and their relationship with Andy Reid, you really could see how much Patrick Mahomes adores Andy in the post.
Yeah, there was one moment where he was running away from Andy, I thought, and it was just Andy was trying to catch him, but it was just a momentary thing. And Mahomes is very intense, but he obviously clearly has great affection for Andy. Now you can say, well, Jim, why do you keep referencing Tammy? I don't know if you saw at the end when he won, who was at his side the whole time. And that's Tammy, and he's a great dad. First, he's a great dad, and then he's a great coach.
Now, Jim also had a very big noteworthy interview with David Tepper, but I want to save that for Action Alerts Plus, because I really want to get your thoughts on it.
That's the right thing to do. Obviously, want to save that for the paid people, but I urge people to read. They can go on Twitter to read it, as well as they can go on Twitter to see my picture of DJ Saul spinning the disc, which was glorious, and thrilled that he has another side. I wish I had one at his age.
So, Jim, let's switch gears and let's talk about your Real Money column this morning. Now, you wrote that it's a wait-and-see moment for the market.
Yeah, so let's use stocks, okay, stock metaphor. So there were 2 upgrades of Nike today. So Nike's up 4. Now, if you start feeling that China retail is really weakening, then you may not, even though Nike's got a big meeting this week, that's what they're talking about, and the great CEO, John Dono, is so fantastic, you might regret that you bought it up 4. Okay, I'm not saying, Nike's a superior, great company, but you have a lot of China exposure there, and so I wish that it were not up 4. That would be an easier play. So that's the kind of thing that, David Tepper is saying. For instance, be careful. That would be that. I see stocks that are kind of that shock me that they're up so much this morning. Disney reports they're up 3. The companies are making back the loss, okay? And I think that's terrific, because I always advise, don't sell into a massive panic. Buy. And that's the way we feel at Action Alerts. Friday was the wrong time to sell. Now, if you want to reposition, it's the right time to sell. You sell into strength. How terrific. Some people need to reposition. Use this.
But Jim, for you personally, when do you know when it's the right time to make a move?
Well, for me, I think that you have to assess, you have a medium-term view. That's what I've always liked. And a medium-term view tells me that if you see a death in America, which is what we saw, by the way, with Ebola, someone died. You saw a very sharp sell-off, and then a week later we bottomed. And we did a lot of work about Chipotle, and when Chipotle was going to bottom, and we saw that Taco Bell was 18 months, Jack in the Box was 18 months before people forgot that was happening. And that's a good, I think that's kind of the way I view America, which is that we will get this under control. I think it's really much more an area, much more of a, where there's undeveloped, these relatively undeveloped areas like China moving to Africa, which they've done with Belt and Road Initiative, that are far more at risk. This is a public health issue. And we happen to have a very good public health system. We do need to see the quarantine work, and that's why you can't sell everything. But the reason why I know in my medium-term view is that we're up so much. And we have a tremendous rally. At the same time, we have a Democrat who is avowedly anti-capital. So let's say he wins and whatever happens, something happens with President Trump. What does occur? Do we really have a socialist candidate running for president while we own the stock of J.P. Morgan? That's a little bit disconcerting. So I think the answer is part one, politics, and part 2, the idea that the bounce back is too vicious, given how much we were up.
Now, of course, you can read more from Jim over on realmoney.com, and you can read more about our stock of the day, Exxon Mobil. Now,
that's really good that we're writing about Exxon Mobil, because it's at the epicenter of my view. My view being that if you believe that the long-term prospects of a company are negative, then you're not going to get protected by the dividend. So, I mean, nary a day do I pick up a paper that I don't see a country that is trying to divest their stock of oil companies, or that's trying to maybe ban and go EV by a certain date, or roll back the carbon footprint. And the most important thing I thought about Exxon is Satya Nadella. I mean, $1.2 trillion company that is bent on lowering its oil use. Now, let's say you're a supplier to them. Well, they're bent on lowering their oil use. So I think that if you're an energy company, even let's say a power company, they want the power companies to go renewable. Now, I want to be very clear here. Aubrey McClendon was a good friend of mine. He was the godfather of natural gas. I have been a gigantic supporter of natural gas. If you go to the New York Times, I actually wrote a letter that said, listen, we are so bountiful with natural gas, we have to be all in because I want our country to be energy independent. So I am the last person you want to take on this, because Aubrey and I plotted for years to bring about natural gas. And unfortunately, he died. We don't know whether he killed himself or not, but I had tried to get a hold of him the night before because I regarded him as someone who had really been a great teacher of mine. I have been the single biggest proponent of Cheniere. I recommended Shirisuke stock at $8. I love the LNG story. Nothing's changed because the rest of the world needs it. All I'm saying is that if you look, that it would be a gift to be able to sell a Chevron or an Exxon higher, because over the long term, history is not with them. That's okay. History is with Tesla. So if you really like Tesla the way I do, and you really like it, it's very difficult to like Exxon.
So do you think, based on that, oil has had its day in the sun and it's just time to get out of, oil stocks, let's be specific.
Yes,
that
thank you.
You should get out of oil stocks?
Well, I think that they're wasting assets, and they are going to have the possibility of down years for many years. And I think that a couple of last straws, we had Iran taking out, some people say a third, some people say half of the Saudi production. We have Iran actually shelling U.S. soldiers. You have maximum tension, and oil goes down. So what it says is there's too much supply. By the way, the new numbers came out for last year for oil in our country. Big increase. Lower CapEx, big increase. So that means that they can even continue to pump. Rusty Brazil from rbnenergy.com, which I urge people to look at, is giving you the real skinny. There's no out in the forward curve. There's no growth. The oil's down. Oil's here 5 years from now. Well, if you sell a commodity that is flat or down, I don't care how much you can lower your cost of that commodity. What happens is the revenue line could go down. And there isn't a money manager in this country that wants to own a stock of a company that the revenue line could go down over time. So I would prefer people to understand, not my discussion about millennials, which is important, but my discussion is someone who's been a money manager for 40 years. I used to when I first started, I would say, you know what? I got to buy X stock. I know everyone thinks true that the revenues are going to go down, but they're going to make it up by cutting costs. Do you know that every time I did that, I was wrong? So I changed my view. So the people who are saying to me, Jim, you don't know what you're talking about, well, that's fine. Jimmy Chill doesn't mind that. Understand, I'm talking about stocks. Do I want Exxon to be in trouble? No, they employ millions of, 100,000 people. No one loses their job, but I am pointing out that it's very difficult to own a stock where the revenues in the out years look like they could be down.
Jim, after the bell today, we hear from Alphabet, and going into this earnings report, what's the one number that you're watching?
Alphabet, what we really want to hear is Google Cloud Service. I was really kind of amazed at how strong Azure was, and then thinking that certainly Amazon Web Services has to be weak. It turns out Amazon Web Services was even stronger. So I think that if they talk about how they're starting to see a lot of orders. That's enough. That's enough to drive things.
All right, Jim, thanks so much for joining us today. Guys, thanks so much for tuning in. We are now heading over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. This is one episode you're not going to want to miss because not only are we talking about David Tepper, but the portfolio is also making some moves in oil. So if that's something you're interested in, head on over to watch us at actionalertsplus.com. I'm Catherine Ross, and we'll see you tomorrow.